This is Fresh Thinking by Snowden Optiro, the podcast where we share ideas from the world of mining and how they apply to industry today. Welcome to episode 40 of Fresh Thinking. My name is Justine Tracy, Principal Consultant at Snowden Optiro, and I'm joined today by Matt Mullins, who is Snowden Optiro's Head of Advisory for Europe, Middle East, Africa and Asia. Matt is talking to us today from London in the UK. Welcome, Matt.
Thank you.
Today, Matt will be talking to us about his experiences around creating value through increasing productivity within the minerals industry. Matt has 40 years of experience in the industry. He started his career as an underground mine geologist, specialising in resource estimation and geostatistics. Stints as a mining analyst and as a rock engineer gave him an understanding of key financial drivers of mining and a desire to see how we can improve the way we do things. He has pursued various improvement ideas as he's moved through progressively senior positions in Barrick, Billiton, BHP and ArcelorMittal. So Matt, you do have a wealth of experience. You've been involved in the mining industry since before I started school, actually before I even knew about the science of geology. You've worked across multiple commodities over almost every continent within companies and as a consultant. I'm sure you have plenty of stories you can share with us about both good practices and bad practices around managing productivity in the mining industry and what has changed over the years. What would be some of the big changes you've noticed?
So, Justine, thanks for that introduction. It hardly seems like 40 years because it's just flown by with so much interesting work and so much fun and incredibly interesting people that I've met. And as you say, I've worked on or with major projects and some of the best ore deposits in all the continents of the world. And that's been an incredible learning experience for me. But right throughout the learning experience, I've always kept my eyes open for looking at how to do things better. I have seen some major changes in the industry in that 40 years, and especially I'd say that the biggest changes I've seen have been in the last 10 years. And I think a lot of it was driven by the super cycle, we call it, or the boom of the 2000s. And the biggest things I think we've done are really we've embraced technology all the way through the value chain from exploration to mining. We all recognize that. Secondly, I think we've actually finally got serious about the environment. Not only cleaning up the mess we made in the past, but making sure that we're not making too much impact on the environment going forward. And I think that is a journey that we're going to continue and do very well at as we continue that journey. Also, I think we've improved our safety record incredibly. That's a link to our focus on the environment and also our focus on management and management styles. But I see some very, very welcome safety improvements, particularly over the last 10 years. And I think the really big one for me is that we've embraced diversity. That has increased the pool of people that we access for senior, middle management and junior positions in mining, but it's also increased improved the way that we look at management, the way we look at how we operate and execute our projects. And I think that's been a welcome improvement and a welcome change.
Yeah, great. So throughout this career, Matt, when did you first actually become interested in making changes in productivity?
I can't actually remember when I really got involved. I suppose right from the beginning, my first job, I kept on thinking, can we do things better? Can we do things more efficiently? Can we do things quicker? And before I even knew what productivity was all about, I did a stint in the old Chamber of Mines research organization in South Africa. And that opened my eyes to operations research approach to solving problems, so the really detailed scientific and engineering solutions. But it was really when, quite unexpectedly, I was put in charge of business excellence at that stage at BHP for Africa and the Americas. I really knew nothing about my job, but I learned pretty quickly. And that's when I learned about Six Sigma, and I learned about maintenance, and I learned about processing improvements. And we made a lot of mistakes in those days, which hopefully when I had a second round of looking at productivity that we learned from those mistakes and we did things quite differently. Those mistakes, I won't go into any detail, but were fundamental to actually making sure that productivity is correctly implemented and that it sticks, so that your improvements actually do stay after a couple of years or after the key people move on.
Yeah, great. So a term that's mentioned a lot when you're referring to, or when people are referring to productivity in business, is the capital efficiency ratio. And my understanding of that is that it's the ratio of how much a company is spending on growing their revenue and how much they're getting back in return. Can you elaborate more on that metric and how you use that and measured it?
Yeah, that's a pretty good question. Thank you. So certainly it's a project specific metric, and during the period when we're trying to get as much production out as possible to feed what we call the Chinese dragon through the huge growth period, decade-long growth period in the 2000s, we used capital efficiency ratio to determine how well we were spending our capital. And really, it's just the ratio of NPV over initial capital, and anything over 1 is usually good. Anything under 1, even down to 0.3 is pretty good. But the trend was very informative. For progressive projects that we were developing, that metric was declining. And I got intrigued by this because I was mostly involved in the project world, but before I sort of got back involved in productivity, and I did a lot of detailed analysis of why it was going down. And around about 2012, I managed to, I think, get to the bottom of it, and it was effectively declining productivity. We just weren't spending our money wisely anymore.
So Matt, was this decline in capital efficiency ratio actually recognised by the companies at the time?
No, it was a bit of an uphill battle to get traction in terms of recognition that we had a problem. Much of the commentary at the time around declining productivity was related to the impact of declining grades, increasing stripping ratios, and the like. And we had to do a fairly detailed analysis over about 6 months to actually convince the powers that be that we did have a problem. I did a number of submissions to the Australian government, to various commissions on declining productivity, and we got the debate going. The biggest part was convincing the company that I was working for at the time that we really needed to, that we had a problem, really need to get serious about it.
All right. Okay. So what were actually? Can you describe some of the warning signs?
I think that the biggest thing was in equipment productivity. So the availabilities, the utilizations, the rate of loading, the components of what we call the OEE, or overall equipment effectiveness or efficiency equation, were progressively going down. So the equipment hours that we were looking at in terms of versus best practice were well below best practice. So if you look at sort of an ultra class truck, for example, it should be operating at about 5,500 to about 6,000 hours a year as a fleet, for example. And we were looking at numbers well below that. But it wasn't just the fact that the numbers were well below that, it was the declining trend. So in terms of productivity input numbers for capital projects, every year we were dropping those numbers because they were higher than the actual performance of the fleets. And we could track that performance over multiple years and show that it was a declining trend. And unless we intervened, it was going to become a very serious problem.
Okay. So you intervened. You did do an intervention, or how did you manage that with your management?
Yeah, that's also a very good question. I think that took it seriously when I showed them that of the trucks that we had throughout the company, and it was a big company, and we could park a third of them if we got our productivity numbers up to industry best practice. And that helped to focus their attention, but also the fact that when they said how much free cash flow can we improve if we improved our productivity. At that time, I didn't have very concise or well thought out estimates, but it was in the many billions of dollars, and that served to focus management's attention. I think that the comment from one of the senior managers, in fact, one of the board members, was that this creates more value than any project we could do. And I think that focused a lot of attention on the fact that this could actually transform the company. It was at that stage very much ahead of the industry. So when we started the productivity journey, the industry was still discussing, parts of the industry was still discussing the nature of the problem and whether we did have a problem in actual fact.
Yeah, okay. So ultimately, what were the results of the intervention, Matt?
Those are public, have been publicly presented, and the final result was an improvement in annual free cash flow of about $14 billion, which is phenomenal. That's over a period of 6 years. Now, the intervention itself really was only 2 years long, and we disbanded the project at the end of 2 years because we felt that we had embedded the productivity improvements in the company DNA, and that it was self-sustainable going forward, which has proved to be the case.
Great. So a lot of these changes and this decline in productivity you talk about, do you believe it's still relevant and can be applied in industry today, given when we first started talking, you mentioned how much better we are now doing in industry?
I think the industry has a much better understanding of productivity and efficiencies, and I see a lot of great improvements in the industry and sustainable improvements. I also see technology as starting to come into its own in terms of ensuring that our productivity journey continues and that we continue to reap the benefits or the rewards of improved productivity.
Yeah, okay, great. So over the years and that intervention on productivity, what are some of the key learnings you could share with us that we can take with us for implementing in our business?
So that's a great question, Justine, and one that I've thought very deeply on, because I do recognize not only the successes that we had from that intervention, but also the things that if I did it again, what I would do differently or try and improve on. The first one is really, recognize that you have a problem. Unless you can convince people that you have a problem, that you have a vision of how to fix it, and especially to get senior management buy-in, you're not going to succeed in any productivity improvement initiative. Just sell the vision, sell the need for change, get all the senior managers on board. Now that takes a time, and I underestimated the amount of time it would take to get everyone in the boat and rowing, if you know what I mean. The second thing, the productivity is very much a can-do initiative. And so you need to create a language around productivity, a positive language, a language of can we fix things, how can we improve things. So we had languages like No Man Left Behind, the golden thread, linking metrics to company value, various other things which got around the company. We advertised that language in all the forums that we could find. I think measure everything that you can, but be absolutely clear that there are only a couple of metrics which really drive productivity. So you need to create a hierarchy of metrics and just focus on those key metrics which really count. Productivity is a very interesting metric because it's a ratio. It can be normalized, so it's additive, and it can be looked at over time. So what I could do is combine all my productivity metrics, whether for equipment, whether for people, whether for the supply chain, marketing and capital projects, into a single productivity measure for the company as a whole. And that was an incredibly powerful measure. So if you wanted to know how well the company was doing in terms of productivity, you could look at one metric. In fact, I had a total of 10 metrics that I could provide to senior management, which could describe the overall productivity situation of the company at any point in time, which was fantastic. I suppose that the biggest learning that I had in terms of what I did wrong was I underestimated the amount of change management needed to successfully implement a productivity improvement program. The amount of convincing you have to do, the amount of work you had to do in getting everyone to not only understand productivity, but understand those key drivers. And that's something that I would do differently going forward. I would say at the end of that intervention, if I look back on it, probably 60% of my job was change management, was talking to people, convincing them, discussing it, looking at problems from a different angle. And about 40% was the technical solution itself, the metrics, and how to drive those metrics to conclusion. The other thing is that often we look at metrics, just going back to that, on their own and without looking at the context. But you can definitely relate metrics even down to the shop floor to shareholder value or increased cash flow. And developing those equations, I think, are really important. Not difficult to develop them, but you can actually relate those. Once you can do that, you can also set targets for those. And in the setting of the targets, we had a very innovative way of looking at that. And that actually was a very, very successful part of the project as well.
What further reading would you recommend our listeners for more information on increasing productivity in their business in the mining industry?
Another great question, Justine. I was quite amazed when I started the productivity journey at how little has been written about productivity in the mining industry. Most of the research that we did was focused on other industries, and in particular the automobile industry. And this goes back to time that I spent on the stock exchange, where I did a detailed investigation of the automobile industry and how certain manufacturers had improved their own productivity. So I went back to that and we investigated the automobile manufacturers, in particular Toyota, and looked very carefully at the Toyota way and borrowed a lot of their ideas. One of my favorite books, I would say, from that time and still today is by a person called Elia Goldratt, The Theory of Constraints. And it goes back about 20 years, but I think is still valid today because he really goes into the psychology of change. And it's something that I found really struck a chord with me. But there's still, the literature today is still, I think, quite light on productivity in the mining industry. And really, we should be pushing for more papers, conference papers, and conference themes on productivity in the industry.
Great. So we will put some information about that literature and some of your slides that you were talking to today. We'll put that on the snowdenoptiro.com website. You can also subscribe to the podcast on Apple Podcasts, Spotify, Stitcher and Google Podcasts. Thanks for joining me today, Matt, and those wonderful stories and the journey you've had managing production in the mining industry.
Thank you, Justine, and thank you for the time today.